We also need to talk about the Bank of America effect on other banks. In the banking world, there is a follow the leader mentality. JP Morgan and Wells Fargo hate to be second, but they hate missing out even more. Now that Bank of America has broken the seal and disclosed XRP exposure, the stigma is gone. Compliance officers at other banks can now point to BOA and say, they are doing it. Why aren't we? We expect a wave of 13F filings in the coming weeks, revealing that other major players have also quietly taken positions. This is the change that is happening overnight. The herd mentality is shifting from avoid to accumulate. Furthermore, let's look at the short squeeze potential. With the price dropping to 145, retail traders are piling into short positions, betting on a collapse to 1.0 solid. The funding rates are turning negative. This is exactly what the market makers want. They want to trap the bears. If we get one piece of positive news, like the Clarity Act passing or another bank disclosure, the price will rip through those short positions, forcing them to buy back. We could see a move from 450 to 250 in a single 4-hour candle. The setup is identical to the God candle we saw in July 2023 after the lawsuit ruling. Let's address the bear thesis. Critics point to the declining transaction fees on the ledger as a sign of low usage. This is misleading. The number of transactions is high, but the fees are low because the network is efficient. That is the whole point of XRP. It's cheap to use. You don't value a payment network by how expensive it is, like Ethereum. You value it by how much utility it provides. Bank of America isn't buying it because they want to pay high fees. They are buying it because it's efficient. The bear thesis is broken. Finally, we have to touch on the global context. While the US is the focus today, remember that Japan's SBI Holdings is about to launch RLUSD on their exchange. The global pincer movement is active. The US pushes from the west, ETFs. Japan pushes from the east, stablecoins. The squeeze is on the supply, and the price is the only release valve. What is going on, XRP Army? Welcome back to the channel. Stop looking at the red candles for 1 second and listen to me very closely. While the retail market is panicking because XRP dipped to the 145 level today, the single most important document in the history of US banking adoption just quietly hit the SEC database. This isn't testing anymore, it's live. We are talking about companies that move billions of dollars a week. They are now using XRP to settle internal accounts. This creates organic volume that doesn't care if the price is $150 or $5. It provides a fundamental floor to the price. The Bank of America news combined with the G Treasury launch is the perfect storm of speculative and utility demand merging at the same time. We also have to address the Standard Chartered reiteration. Amidst this dip, analysts at Standard Chartered have come out and reiterated their 8.0 price target now for 2026. They are looking at the same data we are, the ETF accumulation, the regulatory clarity, and the banking adoption. They know that the current price action is noise. When a major bank doubles down on an $8 prediction while the asset is trading at 150, that is an asymmetric bet. The downside is limited. Maybe we go to 120? But the upside is 400% plus. That is the trade of a lifetime. Finally, look at the Clarity Act catalyst. The Clarity for Digital Assets Act is currently moving through the US Senate. Bank of America knows something we don't. Banks have the best lobbyists in Washington. If they are buying XRP ETFs now, it strongly suggests they expect favorable legislation to pass soon. This overnight change we are talking about could literally be the passing of this bill, which would allow banks to hold XRP directly on their balance sheets, not just via ETFs. That is the moment we go vertical. Now, let's pivot to the institutional data, the $137 billion ETF signal. Since launching in late 2025, the US XRP ETFs have accumulated $137 billion in assets under management, AUM. This is faster than gold, faster than silver, and faster than almost any other thematic ETF in history. Yet the price is down. Why? Because of the grayscale unlocking. Grayscale converted their trust to an ETF, allowing long-term holders who were trapped for years to finally sell. This selling pressure is temporary. It is finite. Once the grayscale selling is exhausted, and analysts believe we are 90% through it, the sell side pressure vanishes, but the ETF buy side pressure remains. This is the spring coil effect. The moment the selling stops, the price snaps back up to fair value, which is likely in the 3.00 range immediately. Let's discuss the hyperliquid integration. This is a massive tech update that flew under the radar. Ripple Prime, Ripple's institutional brokerage, has integrated traded, hyperliquid, or is a decentralized derivatives platform. This allows institutions to trade XRP derivatives on-chain with deep liquidity. Why does this matter? Because it brings high-frequency trading, HFT, to the XRP ledger. HFT firms provide liquidity and tighten spreads, making the asset more attractive for large players. It basically turns the XRPL into a Wall Street trading venue. This integration is live now. It is another layer of infrastructure that justifies a much higher valuation. So, this Ripple move could change future overnight. What is the future? The future is XRP as a recognized bank-held asset class. The overnight part is the repricing that happens when the market realizes the selling is done. The roadmap for 2026 is clear. Phase 1, now. The shakeout. Price dips to 140, 150 to scare retail. Bank of America accumulates. Phase 2, spring 2026. The reversal. Grayscale selling ends. ETF inflows push price back to 250. Phase 3, summer-fall 2026. The expansion. Clarity Act passes. RLUSD volume explodes. Price targets 5.0s, 8.0. What is your strategy? The strategy is contrarian accumulation. When the timeline is red, you buy. When the timeline is green, you hold. It sounds simple, but it is the hardest thing to do psychologically. Right now, at 150, XRP is trading at a massive discount to its fundamental value. I am personally adding to my position here. I am looking at this drop not as a rout, but as a gift. If Bank of America thinks it's a good buy, who am I to argue? A critical warning on leverage. Do not try to long this dip with 50x leverage. The volatility is too high. You will get liquidated before the pump. Buy spot. Move it to a ledger. Wait. The time horizon for this trade is 6 to 12 months, not 6 to 12 minutes. Also, beware of fake analyst accounts on X, Twitter. They will post fake charts showing XRP going to zero to scare you into selling. Look at the data. Look at the $137 billion in ETFs. The money doesn't lie. Let's talk about conviction. Why do you hold XRP? Do you hold it because you want a Lambo tomorrow? Or do you hold it because you believe in the digitization of value? If it's the latter, then Bank of America joining the party is the ultimate validation. You were right. You were just early. Now the big boys are here to pump your bags. Let them do the heavy lifting. To wrap this up, the Bank of America disclosure is the smoking gun. It proves that the US banking sector has capitulated. They are adopting XRP. The price is lagging, but it won't lag forever. The future has changed. The question is, will you be holding your position when the rest of the world finds out? Thank you so much for watching this urgent update. If this analysis helped you stay calm during the dip, please destroy that like button. It helps us reach the paper hands before they sell. Subscribe and turn on the notification bell so you don't miss the next update when we reclaim $2 a reward. Stay strong, stay safe, and I will see you on the moon. Peace. This isn't a rumor. This isn't insider info. This is a public filing that proves, without a shadow of a doubt, that the smart money is buying this dip while you are selling it. The headline is, "This Ripple move in the US could change XRP's future overnight." And that move is the official disclosure that the Bank of America, the second largest bank in the United States, is now holding shares of the XRP ETF. In this urgent deep dive, we are going to expose the massive disconnect between the price crash, the rout, and the institutional reality, break down exactly what Bank of America is doing with these ETF shares, and why this specific filing is the green light for every other wealth manager in America to flood into this asset. Let's start with the Bank of America bombshell. On February 4th, 2026, a 13F filing revealed that Bank of America has taken a position in the volatility shares XRP ETF. Now, the bears will tell you, oh, it's a small position. They are missing the point entirely. Banks don't just buy a little crypto for fun. They buy it to test the pipes. They buy it to seed their wealth management platforms. This disclosure confirms that BOA has greenlit XRP for its advisors to recommend to clients. This changes the future overnight because it moves XRP from the high-risk bucket to the bank-approved bucket. We are talking about an institution with $3 trillion in assets. Even a 0.1% allocation from their client base sends XRP into double digits. They are front-running the retail panic. While you are worried about a 10% drop, Bank of America is securing its position for the next 10 years. We need to talk about the retail trap happening right now, February 2026. If you look at the charts, XRP is down. The headlines are screaming XRP rout and 10% crash. This is engineered psychology. Market makers drop the price to shake out the leveraged traders and the weak hands before the next leg up. How do we know it's a trap? Because while the price is dropping, the SHRI TF inflows are accelerating. Data shows that despite the red candles, funds like Canary Capital and Bitwise are seeing net positive buying. Who buys when the price is crashing? Retail sells, institutions buy. The transfer of wealth is happening right in front of your face. Bank of America didn't buy at the top. They are buying right here, right now. Furthermore, let's look at the G Treasury activation. This is the other half of the US move. Ripple completed the acquisition of G Treasury late last year, and just this week they officially launched Ripple Treasury. This platform connects 900 plus corporate clients directly to the XRP ledger for cash management.